So there is a little glitch of voice, so I will be starting all the things from very beginning. So welcome to BISP. My name is Gaurav, and today I will be taking your ARCS series. Okay, so let's start the series. Okay, so today I will be taking your introduction to ARCS. Oh, okay, so Oracle ARCS. This is the specialized cloud-based software that provides companies to manage and automate their process for reconciling financial accounts. Okay, so for example, a large company like General Electronic could be use these services to compare millions and thousands of accounts across global subsidiaries automatically instead of relying on manual spreadsheet. Okay, so to reduce manual efforts, you use ARCS automation process. Okay, so people who are not from not from accounting background, here just quick accounting basics I will be discussing with you. So in accounting, we have double entry system. This says that it is a core accounting rule which states that every financial transaction affects at least two accounts. One account is be debited and the other account which is credited. Why we do this? We ensure that our assets which is equals to liability plus equity. Okay, so the balance which always remain equals. That's why we do double entry system. Then we have two accounts, one is debited and one is credit. Okay, so in debit we give the entry on the left side of the account when the assets and expenses increase. Okay, when assets and expenses increase, we give the entry to the left side, and when they decrease in the liability and equity and revenue account. Okay, so then we have credit. The entry we give for credit to the right side of the account when there is an increase in liability, equity and revenue account. On the other hand, if there is a decrease in assets and expenses, we also pass the credit entry. Okay, so here we see the example of Adam and John. So Adam is the borrower who is borrowing money from John, which is $300. Okay, so Adam, the person who is borrowing, he received the case amount of $300. Now he have to pay John. Okay, so after some time, it is a liability for Adam to pay $300. So in his book he debit, on the other hand he credit that amount. Okay, so this is how it tallies here. So this is the general accounting basics. Then we have account reconciliation. Okay, so as you are aware of that, account reconciliation we do when there is error of omission or there is error of rules. You are debiting the thing instead of you credited. Okay, so we do at that time account reconciliation. So this is a process of comparing two different financial records to check the accuracy and consistency. For example, a company would reconcile its bank statements with its own cash records in the general ledger. Why we do this? To ensure all the transactions are recorded correctly and the ending balances matches. Okay, so this is the understanding behind account reconciliation, why we do, and to maintain the accuracy and consistency in the organization. Then next we have the process of account reconciliation process. So in account reconciliation process, we doing this thing in previously in ERP. So first is to identify the account. Okay, so here first you determine the account which is need to be reconciled. It might be a cash account, it might be a bank statement, or anything else. Then we have to collect the information. So you have to collect all the necessary records such as your general ledger, then your reports and the bank statement. Then after collecting this, you go to comparing their balances. So you will be looking for the ending balances in both the records to see if they matches. Okay, so if they do not matches, you identify the discrepancies. Okay, here you find any differences between the bank statement and general ledger. Then you give a check inconsistency, why this difference here occurs. You check for it, you investigate it, you investigate the reason for the difference, why this difference occur. Okay, so then you after investigating, you will be going to give the adjustment entry. Okay, this is the general entry which we give for the adjustment. So relation reviewed and approved. Okay, so under this, a manager or a supervisor will review this reconciliation for the accuracy and approval process. Okay, then second process is to record this transaction. Okay, so you have to keep a reconciled report and records for future references and audit purposes. Then the last step is to repeat this process regularly. Okay, so you can go for monthly or quarterly as per your choices, but repeat this process so that the consistency stays continue. Okay, so before you do all these things ARCS in your ERP, like in your spreadsheet, there are certain challenges. Okay, so first and the most challenges is our manual process. Okay, so when you do all these things by hand, which is a slow process and which is prone to error. Of course it is prone to error because you are doing all these matching all the thousands transactions and million transaction by hand, so which can lead to error basically. So then we have safety issues. So under this, there is a risk related to handling sensitive data files or storing sensitive information in unsecure spreadsheet, which could lead to safety issues. Okay, so when you are handling a financial data file which is a strongly secured file in your spreadsheet, it causes of insecurities under this. So you have certain safety issues. Then we have audit issues. So in audit issues, problem that arises during external audit. And why this problem arises? Because you have disorganized or incomplete reconciliation. Okay, so that's why this audit issue arises. Then we have lack of control. So under lack of inconsistent rules and procedures to manage the process. Okay, so like suppose there are employees, every employee has different rules and procedure to do things. Okay, so certain things can lead to lack of control, you cannot control it. Okay, then we have limited visibility over here. Okay, under this limited visibility, you are not able to see all the status of all the reconciliation at particular time, and the manager would not be able to know which account are completed and which are still in process. So this is limited visibility. Then we have incomplete information. Under this incomplete information, you have not all the necessary data to perform a full reconciliation, which could be your missing bank statement or your lost receipt. Because of these certain things, there is incomplete information issues arises. Okay, so then we have our ARCS, which is Account Reconciliation Cloud Services offered by Oracle. So it is a software, built-in software, and here are the features of this product. When you purchase it or buy the subscription of the ARCS Oracle, you will get these features. So first feature we have is our integrated data loads. So under integrated data loads, it provides ability to import data from various sources into the system, which is a very easy process. Then we have account grouping. Suppose you are having multiple banks account. Now you want to compile all those bank account into particular bank account. Okay, so you can compile all those bank account in particular one bank account form. Okay, so this is the grouping you here. Then we have drill through sources. Okay, so under this, it provides the ability to check on a number in a report and see the underlying transaction that make up all the total. For example, clicking on a total balances would show you every transaction that contributed to it. Suppose there are 10 to 15 transactions. Okay, and you have 10 to 15 balances of every transaction. When you compile all those 10 to 15 transactions, you will form a final balance, which is the contribution balance. And when you drill it down, you can see all the 10 to 15 balances. This is the good thing over here. Then we have mass administration updates. Under this, it provides the ability to make changes to many accounts or setting at once particular time, which will save your time, of course. So these are the features of ARCS. Then Suppose you are doing the same thing in your ARM, which is account reconciliation manager. So first of all, this is on-premises solution. You need a huge infrastructure to manage this ARM. On the other hand, performing all this task in ARCS, it's a cloud services. You do not have to go for a big infrastructure. You just have to pay the subscription amount and just get this all these features. And the bestest thing is it's a cloud based, so it won't take any storage and anything else. Okay, so there are certain extra features here, which are, first is our real-time visibility. Okay, so in real-time visibility you can see the status of all the reconciliation live. Okay, then the second one is automate alignment. Under this, the system can automatically match the transaction that meet special similarities, which help to reduce your manual efforts. Okay, then here is the built-in workflow. Under this built-in workflow, the system has a predefined process with tasks, deadlines and approvals to guide the user through the reconciliation process. Okay, then we have collaboration tool. Under collaboration tool, it allows team members to communicate and work on the reconciliation together within the system. Okay, so this is the process of how you import to how you export. Okay, this is a you can import in the form of bank statement, credit card, workday payroll, or your Oracle Fusion PPT. Okay, this is our source system which we importing to our data management, and then we getting our export as the form of custom reports, dashboards, standard reports, all this. So there are, first option, we can import this data in the form of flat files or with the help of APM automate. Okay, so importing this transaction will you have to go to, under data management you have to go for data mapping and load. Under this you will import your data. Okay, after importing your data, we have two methods here, not two methods, two modules. First is reconciliation compliances and the second one is transaction matching. Okay, so I will discuss you these two modules later. First, let's just go through with this. So after doing all this thing, you can export the reconciliation in the form of custom reports. You can customize the reports, then in the form of dashboards and standard reports. Okay, these are the outputs of the system which provide visual summary and detail about the reconciliation. Okay, so as I said, there are two modules in our ARCS. First is reconciliation compliances and the second one is transaction matching. So when we just let me show one more thing. Under reconciliation method we have three methods. First is balance comparison, second one is account analysis, and the third one is variance analysis. So let me discuss this in detail with you guys. So open Excel file. Let me open my Excel. Zoom it little. Okay, so take an example of bank journal ledger and bank statement. Under this you have certain balances, suppose 200. This bank GL is our source system and this bank statement is our subsystem. Okay, so here is the amount is 5003 and 300. Then we have 400 and 450. So these are the balances in our bank journal ledger and bank statement. Let's just auto sum this. 350. So in RC compliances we have three methods. First is our balance comparison. Okay, so under balance comparison we what we do in balance comparison, we match the ending balances. Here you can see we match these balances. These are the ending balances. We match these balances over here, both the source system as well as the subsystem. Then we have account analysis. In account analysis we just get one system, which is our source system. We can only, there is no other system for that we can compare it. Here in balance comparison we can compare our source system with our subsystem, but in account analysis method we just have one system, which is our source system, so we cannot compare this. Okay, so we have to give the explanation for the ending balances. Suppose any account like prepaid expenses account, you get the ending balances, so you will be giving the explanation for the ending balances. Okay, you won't be comparing that. Then we have variance analysis. Okay, so in variance analysis you will be seeing the variance between these two data sources, okay, which is 100. Now in variance analysis, just correct the information. Okay, so in variance analysis you can go for monthly, you can go for quarterly, or you can go for scenario wise. Suppose this is my ending balance of January, this is the variance for January. Then we have variance for Feb, which is minus 200. Then we have balance for March, which is minus 300. Okay, so you can go for monthly, you can go for quarterly, or you can choose a scenario. You might go for 6 months, okay, you might go for 7 months, as per your choices. You can go this, do this monthly, quarterly, or scenario, and your variance analysis. Okay, so these three methods are in our reconciliation compliances. Okay, so RC, this are under our RC module. Then we have another module, which is transaction matching. Okay, so in in RC we compare the ending balances. Okay, this one we compare, this the highlighted one which I have shown you. This one we will be comparing in our RC. But when we are talking about transaction matching, we will be going for single accounts. Okay, here one on one we'll be checking for each account, specific accounts. Okay, we'll be matching transaction for specific accounts. So this is the difference between RC and transaction matching. In transaction matching you will get the transaction in bulk, but on the other hand in RC you will be getting a little accounts. Okay, you will be comparing the ending balances of those accounts. So this is the understanding behind the modules and their methods. Let's go back to our PPT. So see here, you give your balance per GL, which is your source system, and you give your balance per bank, which is your subsystem might be. So you load both the balances, the difference between these two balances, which is 2300. This difference will calculate automatically. You won't have to give any manual efforts to calculate this value, this balance. Okay, you just have to give the explanation for this balance, why this occurs, why this difference occur. After giving the explanation, the unexplained difference goes to 0. Here it goes to 0. It's showing that adjusted balance, which is 2300. It tallies. Okay, So this is the good thing about ARCS, that you won't have to give any manual efforts. It automatically do all this for you. So look here, you have two system in balance comparison, but when you talk about account analysis, you have just one single system, which is your source system. So under this system, suppose it might be your prepaid expenses. So like suppose it might be your prepaid expenses for 3 months. Now for the 3 months, each month you are giving 3,200, and for 3 months, which is 9,600. So you will giving the explanation as that this is the ending balances of prepaid expenses, which is 3,200 for each month till 3 months. Okay, like this you have to give the explanation here. Okay, then we have variance analysis. This is your previous, this is your current. February is your previous, and this is your current period. Okay, so the balance for the current period is here, and the variance, the previous period, which is February, is here. So the difference between both of this is it automatically calculate, as I said. You just have to give the explanation for the variance, why this variance occur, and you will be explaining. There is a description, short description in variance analysis. You have to give the description, and it automatically goes to unexplained difference, which is 0. Okay, then we have the designs and configuration. Under this we have three things. First one is our format, second is our profile, then we have reconciliation. So let's discuss format. What is format? Suppose here you will be defining the rules for reconciliation, and a format controls the method, which method you are picking. It might be a balance comparison, it might be your account analysis, it might be your variance analysis, it might be your transaction matching, might be your transaction matching with balance comparison, all this. So under this there are 21 pre-built out of box format. This 21 format, you will find a template and you can go for it. But if you want to customize as per your choices, you can from the scratch prepare a format as per your choice. If the client says you how he wants the format, so you can prepare a format as per his choices. Okay, then we have profile. Under profile segment, a profile is created for each account or group of accounts, okay, which is to be reconciled. It links the accounts to a specific format, currency, and the workflow. Under profile, we will be linking this format with profile, then you will be providing the currency, then the workflow, who are the person will be working on this profile. Okay, then we have reconciliation. After completing with the profile, you will be going to load your data. So how you will be going to load your data? You go to periods, then go to, I will show you how to we do it, but just in words I will explain you. First you will go to periods, then whichever period you want to, January, February, Feb, March, any period, just select it and start importing the pre-map data. If you are importing for balance comparison, you will be importing two data files, which is your source system as well as your subsystem. Okay, if you are importing for account analysis, you will be importing one file, which is your source system. Okay, after importing this, you can go to profile, back to profile, and click on that profile and create reconciliation. There is an option of create reconciliation, so you can create a reconciliation. After creating this reconciliation, it automatically reconcile the amounts. Okay, then when it reconcile, it notify the user, who is the preparer and reviewer. It notifies the person who is working on this. So the preparer will go with the reconciliation and check for it, and the reviewer task is to review the reconciliation. Okay, so this is the process. As I said, first you loading the data, you load your source system as well as your subsystem. After loading this, okay, you definitely go for validation. Check for validate. If any error occurs, that means the file is not validated yet. You will again go to import it and then proceed further. After importing, you will go for auto reconciliation. Okay, the method which you have picked, account analysis or balance comparison, any method, it will pick automatically. Then it will notify the preparer as well as the reviewer. Okay, so preparer task here is to give the account explanation. Suppose I am the preparer and I am working on this reconciliation. I got an option of giving a short description and closing the accounts and submitting it. Okay, so this is my task. I will be doing it and giving the explanation for the difference. Then I will be submitting it. After submitting, it goes to reviewer, and the reviewer will give any comment. If he wants, he can approve the reconciliation. He can reject it. If there is any error, he rejects it. If everything goes well and fine, he approves it. Okay, this two options reviewer get. Okay, then we have transaction matching process. So under transaction matching, first we have to so let's understand first this thing. In RC compliances, first we create format. Okay, here you see, first we have to create format, but in transaction matching we create the format at the end. What we first have to create? First we have to create the mesh type. So what is mesh type? Here, so under mesh type, here you define the type of transaction which you want to match, such as credit card deposit, which is compared to sales receipt. Okay, after that, creating a mesh type, you will go to delineate. Under this, you specify from where your data is matching, from where the data matching will come. It might be a bank statement, might be your sales report, any. After this, working with transaction matching type. So under this, you classify the transaction which is to be matched. Okay, so you identify sales as one type and deposit as another type. Okay, this is example. Okay, so then we have defining. Under defining, process of transaction matching, here under this process of transaction matching, you define certain rules of how transaction should be matched. There are rules like I will show you later, but just I will show you about all those rules. It might be your one-to-one matching, one-to-many matching, many-to-one, match with certain tolerance, match with adjustment. All these are the rules which you will be giving here, and the ending step is just to create the format. After completing all the first step, you will go back to your transaction matching mesh type and the status which is in the pending, you approve it, and the transaction mesh type has been created. Okay, after creating the mesh type, you go to format. Under format, you create a new format. You can select transaction matching only, you can match transaction matching with balance comparison, you can match transaction matching with variance analysis. Okay, so you choose your method as per your choices. There are options. Okay, so this all things are in transaction matching. After completing our format, we go to a profile. So for profile, here this is second step in RC, but in transaction matching this will be our sixth step. Okay, so we have to create the profile from scratch. We have to give the format which we have created already. Then we have to give the currency, what currency rate, what all the currency you are taking. It might be your USD, it might be your INR, or any. Then you assign the workflow, who will be working on that. You are preparer, you are reviewer. Okay, then there are options of attributes, you can give attributes. Then after completing this profile, you will go to your job. So what I said, this in period we load our data in RC. Okay, but when it comes to transaction matching, we will be loading our data with job. There is a card which is called job cards. Okay, so you go to this card and load your data which is to be reconciled. Okay, so just let me show you interface. Okay, right now I do not have credentials. I will show you in the next class, we will be going with just let me open my schedule and will show you just where it is, this one. So here, okay, so we have discussed this thing, introduction to ARCS. This overview to ARCS, I will be showing you the interface of the application, and there are cards and clusters I will be telling you later in the next session. Okay, so we have done with this introduction to ARCS session, and what else is remaining? Okay, so we have discussed all the PPTs, all the slides, nothing else. So we will be joining back tomorrow and we will continue with our next topic, which is this one, overview to ARCS. Under this we will be preparing, we will be checking our account reconciliation cloud homepage, then work list, reconciliation, matching, dashboards, reports, application, all this thing. Okay, done. So if any doubts arises in this slides, PPT slides, you can ask me in the next session. Okay, you just comment down it and I will seeing it and just going through it, and I will be resolving that doubt in the next session. Okay, so here if any doubt arise, just comment it down. I will just check it and we will discuss this tomorrow when I will be discussing this overview to ARCS. So that's all for today.